mode.
Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending October 13, 2017. Boy, it's just been a really great year if you're long, and really not so good a year if you've been fighting the markets and fighting price action as it's been moving up. You know, a lot of my friends in the hedge fund business um, have just been really reluctantly fighting this market. I've been telling our members all year long it's a buy the dip market, and we continue to buy the dip as long as the market gives it to us. And the price action's the final arbiter of where this thing is finally going to stop. I still think we have more upside, believe it or not. Now, granted, we're a bit extended. I think we can have a little bit of a resting period, but let's remember, we still haven't had a 3% pullback in what 240 some odd days. It's just we're like number two in the records, and if we go through Wednesday of next week, we'll finally be the longest period without having a 3% pullback in the S&P. Totally amazing. What I've got on the screen here is the daily chart of the E-mini S&P 500 futures. You can see this channel, these green line channel that goes from the left of the screen upper to the upper right corner of the screen on this chart. It's about a 45-degree vector, 45-degree angle to the upside. And folks, that's a strong uptrend. And you can see going all the way back, almost the entire year, there have been zero divergences in the MACD the way we track them. Zero. That means that any pullback, the odds favor it's a buying opportunity, not a further sell opportunity. So, and that's the way I've had our members treat this all year long. Now, for our upcoming option masters class, I'm going to go into a lot of detail on the charts and how we use them. And it doesn't mean that's the only way, but it's a really great way to pair this charts, the way we look at them, with trading options or futures and options on futures. So I highly encourage you, if you're not on board with that, you check it out, because it is going to go from A to Z as far as what we're covering in options and charting and hedging and portfolio allocation, both Reg T and portfolio margin accounts. So as you can see here, we're almost in the middle of the channel, but we're at all-time highs, 25, 55, 50. Now, I had called 25, 50 and then said we'll probably rest a little bit, and of course we extended it to 25.55. And you can see here that a little bit of a pullback would not surprise me. Now, keep in mind, we're in the middle of earnings, or we're just getting ready to kick off earnings. We've had the banks come out. Some beat, some didn't, but they've got a low bar to begin with. And I do believe that those companies that don't hit their earnings potential for this period are going to get punished. So if we look at the indexes, every single one of them here in the US are near all-time highs. I mean, here is the E-minis. But if we come over and look at Nasdaq, you'll see Nasdaq right here near its 2017 high. I mean, that's kind of leading the charge, right? And then besides Nasdaq, let's look at the Dow. The Dow is near at the 2017 highs today, Friday the 13th, 22,852, all-time highs that it hit today. I mean, if we look at the Russell's the only one over the past week that hadn't punched out a new all-time high. You can see this huge, what I call the biotech run for an index. It ran really strong up to these levels up here. And then we put on a consolidation, slightly bearish trade at these peaks up here, and we're nicely in profits right now in the Russell. But you can see here a little bit of a consolidation, a little bit of a bear flag kind of poke, or bull flag here kind of forming. Doesn't mean that's what's going to happen next week, but you can see money is just poured, literally poured into the small and mid caps since August 21st. And a little bit of a sector rotation, because while this one was screaming higher, the other indexes didn't move nearly as strong. Okay. Now, the other thing that's really interesting is if we look at the all world index, this would be Vanguard. Again, look at the channel going back for the entire year 2017. It almost looks just like the E-mini S&P 500 futures. And this is the all-world index. You can see globally, we made new highs for the year today. And it continues to move higher. So from a global perspective, we've got that going on. Let's look at the Nikkei. The Nikkei, the Japanese index. Again, today, new 2017 highs. It just took off. The Nikkei did 21,300 for the Nikkei futures. And then let's look at Asher, which is the tracking stock for China. If we look at China, again, today, all-time high, or 2017 highs. Just really busting a move higher. This gives us this synchronized global growth, which is why markets, any dip, money is going to come in right now. That's the way it happens, short of any geopolitical risk. Like North Korea, that ding dong ho ho hostess Twinkie eating freak from North Korea. If he kind of settles down, then it's not going to stop the market, right? Now, I've read reports that the Feds could misstep and start to increase interest rates too soon, and that could unwind the market. Well, guess what? There's over an 80% shot right now, according to the 30-day Fed Fund futures, that they're going to hike the rates in December. And what do you see price action doing? It's going up. It's already got that factored in, folks. So at least for the next 90 days, we got a good solid path ahead of us to move higher. The other thing that can upset that is earnings come in very poor. Now, if they do that or they underperform, we can get our 3% pullback. I don't think it'll be much more than that, because I don't think earnings are going to be that bad or that missed. We're going to have some winners and losers, of course, like we always do. But I do believe that the markets just want to pound higher. And then, of course, if the markets are moving higher, then you got it. Volatility is moving lower. And if we look at the VIX, you can see here we reached a little peak over the past week 3 days ago. Right, and that peak was only 10.6, and now vol is coming back down again. A lot of people have theories as to why vol is so low for this period of time. I've shared with you on numerous weekly updates my opinion. I do believe the primary culprit is the passive index funds. And a perfect example of that would be Vanguard, where they've got this index fund. Tons of money in these index funds. So rather than investing in an individual stock, they buy the entire S&P. So Vanguard, just to give you an example, they got a fund that of the 500 stocks in the S&P, they have a 5% ownership stake in 495 of them. When I read that stat, I'm like, that's amazing. Now imagine if the markets start falling and they got to unwind these passive index funds because they got to sell, right? What's going to happen when they sell? Well, both good and bad stocks are going to take a beating. Normally, before they had this invention of passive index funds, a lot of big money, correlated their allocation of their capital into better performing stocks. Why invest in poor performing stocks? So they allocated their capital in better performing stocks and bonds, and they had that ratio and that allocation. Right? And it goes into a lot more detail than that, but that's at a very high level. And then when the markets fell, well, then they would just reallocate and take on safer plays, maybe in the utilities and staples sector and something like that. And then they would take money out of the higher beta sectors or sectors that were more growth. They would spend more time in the value-oriented sectors. But now with passive index funds, that's going to go out the window. They're just going to sell. Because they're not trying to pick an individual winner or an individual stock. They're investing in the market. So what's going to happen when the markets start to crater is they're going to sell everything. So that is going to have a tendency to accelerate downside action. So folks, it's going to happen. I just can't tell you when. For us, we follow the price action. And one of the nice things in our option masters, even though it's titled option masters, you're going to get your masters in options. but we're also going to cover how to read a chart the right way so that you can direct and come up with a directional bias. All right, you need that. You need an opinion on the market before you can trade the market. Even if you're trading sideways, well, that's an opinion. The opinion is the market is going to stay within a range-bound mode, and you need to be able to develop these opinions. So we're going to go through those in detail. But you can see volatility is coming back down again as we go right into earnings. Treasuries, well, look at Treasuries. Bonds was up a full handle today. All right, that's $1,000 in the futures market. And you could see that big run here. Now, I still believe bonds are going to run up a little bit, suck some people in, and then roll right back over again. Okay. The reason why they ran up is on the retail sales and the core inflation numbers that came out today. If you look at it at first blush, it looked like inflation was stronger. But when you strip out energy like gasoline, which I don't know why they do, but they do, they strip it out, then the core inflationary data was benign. It didn't go anywhere. So the Feds could be in this situation where, do they raise the rates? Normally they wouldn't. Textbook theory would say you don't raise the rates, but hell, we're not even in, we're off the highway now. We're off the grid. We got 4.2% unemployment, low interest rates, which you normally don't see, and low inflation. So they got this trifecta that supposedly does not exist in the textbooks, which is why they're puzzled as to why we got low inflation. So in the Fed meeting minutes that came out this past week, you could tell, they're trying to come up with a reason and a theory as to why that's happening. But that's part of the problem. They kind of live in a professorial world, as opposed to you and I, where we have to go out and fill up our tanks with gas. So that is kind of what I'm seeing in the bond market right now. But that's the reason why bonds have moved up, right? Now, the other thing and we've got a couple of things going on in the pound, the British pound. We're looking at the euro. So we got some other interesting plays that we're looking at there. If we look at gold, gold is making a run. Okay, you can see gold has made this run. It's now broaching back through that 1300 area in there. We got a signal both in gold and in silver a week ago, and I had our members going long, and now we've got that signal. We're still in it, and we're trading. And for those that have a smaller portfolio size, or you can't trade gold futures or clearly silver futures because it's $5,000 a point, we're kind of gamma scalping SLV, and we're using a combination of options and stock to do that. So it's a great learning experience for our members. We'll kind of cover that when we get into the option masters, but these are just great signals and great trades that we're taking. So you can see this is where gold is going. Now, the wave pattern would suggest gold is going to run up and then roll over a little bit. If we get a whiff of inflation or interest rates do in fact get raised, then you're going to see gold pull back again. And this yellow line, which is the 200 EMA, seems to be where it wants to sit. So we'll watch that, as well as watching to see if we can get enough energy and escape velocity to clear this 1300 area. Remember, we just went through it today because gold was up a little over 9.6 points. So we entered the day when gold was around 1298. So we cleared it today. Let's see if we can hold it into the early part of next week. Oil. Well, we've gone into a new oil trade now. We're 20 for 20. We're now in a new oil trade. We're going to be doing another one next week as well. And I'll cover these oil futures trades in detail in our option masters, but for our members, we're just having fun with this thing. And you can see that the breakout of the channel, we're back up in this major resistance zone to see if we can clear it. And there's a lot of existential noise going on right now with the president cutting the Iran deal and what it really means. I think near term, it doesn't mean anything. It's mostly noise. You saw the markets react just a little bit to the downside, but outside of that, oil still finished the day up 1.6%. So it was up just slightly under $1, which is a good move in oil as we see it. And then the other one that we're going to be looking at as we go into the winter is going to be nat gas. Now, nat gas traditionally runs stronger in the winter, but remember, this is the futures natural gas, which tends to run stronger in the autumn time frame, right? The end of summer going into fall, September, October time frame. And then I think we may run up a little bit and then roll back over again. So I think there's going to be some trades coming up in this as well. All right, everybody, that is it for our members. I will see you for our weekly market watch. I'm out on the West Coast, out in San Francisco this week, but I will be coming back tomorrow. So I'll be back in office down in Boca Raton, Florida, on Sunday night for our session. And then we will be kicking off our option masters in the next few weeks. If you're not a member, check out, I probably have a link on this webinar series here so that you can come in and sign up. All right, everybody, have a really great weekend, and I will see our members this Sunday night. Ciao, folks.